Greetings. Welcome to GDIC's webinar for the OASIS Phase II Business Administration Services domain. This webinar covers both small business and unrestricted tracks for the Business Administration Services domain. My name is Cal, an AI assistant, and I am your host today. With me is Ab Vand, VP for Capture at GDI Consulting and a subject matter expert on self-scoring proposals. Ab will guide you through today's deep dive into the OASIS Phase II Business Administration Services domain opportunity. Ab has over 30 years of experience in capture and proposal management. He is considered an expert in self-scoring as well as traditional proposal and capture efforts. Ab has managed over 1,000 successful capture and proposal efforts, including over 200 successful self-scoring proposals such as OASIS+. He has also held numerous training webinars for various APMP chapters and Apex offices throughout the U.S. So a few housekeeping notes. First, the link to the recording of the webinar will be sent to you within 24 hours. Second, we will hold a Q&A session at the end. You can send your questions during the webinar by the chat system to the right of your window and Ab will address them at the end. Third, you can download this presentation by clicking on the link under File on the right-hand side panel on your window. We highly recommend you download the slide deck so that you can always refer back to it. So let's see what this webinar covers. We will first give a quick intro to GDI Consulting Services. Then start with giving the general information on OASIS+. Next we will have a thorough discussion of the scope of the Business Administration Services domain. From there, we will deep dive into the scoring system for this domain, and discuss score optimization as well. Ab will also touch on how you prepare the actual proposal or what we call substantiation. The importance of compliance and factors such as pricing and partnering are also covered. Lastly, Ab will provide some strategy recommendations and experience sharing and then finish with the Q&A session. So with that, I will now hand over the control to Ab to start the webinar. Ab.
Hello everyone, and thank you, Cal. As Cal mentioned, we highly recommend that you download the slide deck to refer back to it. Due to limited time we have, I might skip some content, but I wanted to have a full slide deck prepared for you so that you can always refer back to it for full explanations. Also note that we are holding separate webinars for all the 13 domains under OASIS+, and I will post the link to the webinar schedule page on our website in case you want to participate in other domain-specific webinars as well. But note that in each webinar, some of the information is similar. I just don't want you to, see repeat stuff. But when we dive into the scoring system of that particular, domain, that's where the differences arise. Also, for those of you who are unsure if you should go after this opportunity at all, and whether you have the minimum requirements or not, we have a pre-qualification assessment service for just $490, and we assess your contracts and tell you your chances and gaps so that you can be sure of your eligibility with minimal cost. I will put the link to that page on the chat as well. Okay, let's start now. Let me very quickly give you a short intro to our company and then dive into OASIS+. So GDI Consulting has been in business for over 15 years, and we have established ourselves as the premier self-scoring experts in the market. This is not a boast. Just see those numbers, including the fact that we prepared 97 successful proposals for our clients in OASIS+, the initial bidding. So 97 awards we got. That speaks by itself. We have over 650 satisfied repeat clients, 86 of whom are very large businesses, some on the top 10 list of largest defense contractors. You can later refer to this page for more information on our company because we're short of time, so I'll skip the rest of this stuff. Now, I won't go into the details of our services as most of you are repeat webinar viewers, and will just suffice to say that we have 4 main lines of service, including proposal development, capture management, specific support services like competitive intel or price to win, and finally customized training. So we strive to be a one-stop shop for federal and SLED BD needs of small and large companies. Okay, let's start with the OASIS Plus then, and get some general info about it. We call it OASIS Plus 101. So it's good to take a look at the previous OASIS contract, which ran from 2015 to 2025. These years are approximations, as there were different pools awarded at different times. So this is the graph showing the government's spending on this contract during its course of performance. And you can see that towards its end, the government was spending about $10 to $12 billion per year on this contract. Blue is the unrestricted contracts spendings, and orange is the small business contracts spending. Okay, and in terms of the top 10 agencies using OASIS, obviously GSA has been the main user, but since these numbers are all in the billions of dollars, don't underestimate the other agencies involved. More than 30 agencies have been buying services through this contract. Okay, so let's now look at OASIS Plus. That was OASIS, the previous contract. Let's now look at OASIS Plus. So we have the general information. GSA is the contract owner. It's a multiple award IDIQ GWAC, government-wide acquisition contract, meaning that all federal agencies can actually put out task orders under this. It has an open ceiling, number of awards unlimited, and this phase 2 also unlimited as well. Contract duration is 5 years plus 1 additional 5 years. You can think of it as an overall 8 years now, because we are nearly 2 years into it, or less than 2 years actually. First round was awarded. Phase 2 has started January 12th, 2026, officially has started. And it's a rolling admission system, so there's no due date specific. Obviously, the sooner you can get on it, the better, because then you can participate in the task orders that are out there. Now, there are 6 tracks, as they're called. You can think of it as 6 different contracts. The contracts are segregated by the type of company. So there is a total small business contract or track, 8A small business, hub zone small business, STV OSB, WOSB, and unrestricted. So these are the 6 tracks that we have. Now, just so we have one vocabulary, from here on, when I discuss small business, when I say small business, I mean the first 5 tracks. So all these, the total small business, 8A, hub zones, STV, OSB, WOSB, from here on, when I say it's a small business, especially when we go into the scoring, meaning all these 5. So if you're in any of these, that's you. And then we have the unrestricted, or UNR for shorthand on that. Now, in terms of the numbers of the original OASIS Plus awards, you can see that 588 unrestricted, 1,375 total small business, STV OSB 345, WOSB 309, 8A 181, hub zone 131. The numbers might be a little bit more than these, because these are, I think, a couple of months old. They might have awarded a few here and there. But do remember that, first of all, there is no competition. So these numbers might double as far as the government is concerned. I mean, there's no competition for phase 2. And also don't forget that this doesn't mean that, for example, if you're going for STV OSB, you have 345 competitors. No, these are, separated into the domains. So we're going to have, these are about the 8 previous domains. 5 have been added for overall 13. So it's not that, these are the numbers of your competitors in each of these set aside economic, socioeconomic types. It also depends on the domain as well. Now, in terms of the domains, left-hand side, the orange domains, these are 8 of them. These were the original OASIS Plus. Now they've added 5 more on the right-hand side, the green ones. So technical and engineering, T&E, management and advisory, M&A, research and development, R&D, intelligence services, enterprise solutions, which is only for unrestricted track, facility services, logistics services, environmental services, And to the right, business, these are the new ones, business administration services, human capital services, financial services, marketing and digital outreach services, and finally, social services. So it nearly covers all types of services work except horizontal and vertical construction. Even construction trades are included in facility services domain. So even the trades are there, just the horizontal and vertical construction services are not there. Now, many call this non-IT services contract. That is a mistake. Out of the 97 clients that we helped win on this, 36 of them were IT companies. So depending on the type of IT work, many of them fall in the parallel to the type of work done under, for example, technical and engineering. The first one, first domain, research and development, third one, and intelligence services, and perhaps even in the new domains. So that is why many IT services companies can and should also go for this opportunity. Okay, so let's now dive into the main topic of today's webinar, the business administration and transformation domain under OASIS Plus. So the business administration and transformation domain includes services such as administrative, clerical, and support service functions. It also includes record keeping, scheduling, and office operations, also translation and interpretation services, and finally it supports business process reengineering and change management. So agencies, that means government agencies, use these services to improve performance, outreach, or internal operations. If your line of business is in any of these, then this is a fit opportunity for you. You should expect to receive task orders with scopes similar to these once you're awarded on the IDIQ. The relevant NAICS codes for the business administration domain includes those listed here. I will come back to this point when we discuss scoring later on, but I just wanted you to have a list of all the acceptable NAICS codes. Now, if your firm supports capabilities in the business administration area, this is your chance to gain a spot on OASIS Plus. So from small businesses who specialize in this area to experienced large companies, there's room for many participants. So who should actually participate? Some of the companies that might be interested to go after this are administrative services firms working with records, logistics, or clerical operations, BPO providers with digitization, mailroom, or scheduling support, translation and transcription vendors seeking federal expansion, firms offering process improvement and back office support, companies with facility or supply chain coordination experience, small businesses providing administrative staffing, vendors targeting document or data automation, firms interested in general office or mailroom task orders, legacy BMO contractors from the other contract BMO, expanding into professional services, and finally JVs bringing admin services and process reengineering together. This is just a list of some who might be interested. Obviously, there are other types of companies who might be interested in the business administration domain. So if you're good that we want to go after this domain, let's understand the scoring system, as this is a self-scoring type proposal and everything relies on score. I'm assuming that you are familiar with the concept of self-scoring proposals. If not, we do not have the time, unfortunately, to go over it on this webinar. Please refer to our previous webinars on this subject, which are quite a few. You can reach them on our website, GDICwins.com. Okay, so we are going to discuss the scoring system specific to business administration domain from here on. So overall, there are 50 points for both small business and unrestricted. This is the maximum score you can get. Now, if you get 36 for small business or 42 for unrestricted, and above that, you are qualified to be awarded. So that's the threshold. That's the important threshold you want to make sure that you're above those numbers. Now, how do you get these points? There are three main score factors: qualifying projects or QPs, federal experience projects or FEPs, and systems clearances and certifications, or systems and certs, we call them. So you can see that it's 41 for small business or 40 for qualifying projects for unrestricted. Now, I'm going to use the term QP instead of qualifying projects each time. So please be familiar with this. QPs, meaning we are allowed to provide 5 projects or 5 contracts. So when I say a QP, I mean a qualifying project, a qualifying contract. So QPs and then FEPs, federal experience projects. And as you can see, the 5 qualifying projects or QPs are the king. They are the key players. And if you look at it graphically, it's quite obvious here how important the QPs are compared to the others. Now, I'm going to go through each of these main factors and their subfactors. Each of them have their own subfactors, so you can understand how this scoring is built. Throughout, when I show you any graphics, blue is always a small business and orange is the unrestricted. So that's how it's going to work out. Let's start with the QP factor, which is the most important part, the qualifying projects. Okay, there are 5 subfactors under QP scoring. So relevance, scale, integrated experience, management and staffing, and past performance. So those 5 contracts I mentioned, each of them gain some score based on one of these 5 subfactors. And I'm going to now go into each of these 5 subfactors so you understand how they work. You can look at them graphically here, and again you can see here that out of the 5 subfactors, relevance has the highest with 20 points out of it. So you can see that it is very important, but overall all of them are important and you need to maximize on all, but relevance is the most important one. In other words, if you don't get good scores on relevance, at least you're doomed, in fact. Okay, now let's look at the relevance. So I'm going to go over each of these 5 different subfactors. So we start with relevance. You can have up to 5 QPs or contracts. Each of them will get 4 points. So 5 times 4 is 20. That's why the maximum is 20. Now, contracts can be, the type of contracts can be federal prime contracts, federal subcontracts, or commercial contracts. All of them are acceptable. And there's no distinction, no difference, no extra points for federal compared to commercial contracts. For federal prime contracts, they can be standalone contracts or task orders. Task orders under multiple award IDIQs or BPAs, or single award IDIQs or BPAs, FSS, GSA mass, or BOAs. All of them are acceptable. Note that I said task orders, not the IDIQ itself. So you can't use an IDIQ itself. You have to use the task orders under it. Each task order is considered one contract, one QP. Also, OTAs, other transaction authority contracts, are allowed, but grants and co-op agreements are not acceptable. So you can't use grants and co-op agreements. And finally, all the contracts must be based on FAR Part 37 services, meaning that you can't use a contract in which you provided equipment to the government. So supplies contracts are not acceptable. Now, having said what type of contracts are acceptable, let's look at the 4 main requirements for these 5 contracts that you bring to the table. The first requirement is called the minimum annual value. Now, contracts must have an annual value of at least $500,000 for small business and $1 million for unrestricted to be used. If they're below that, they cannot be used. So you cannot use a contract that is smaller, that has an annual value of less than 500K for small business, 1 million for unrestricted. Now, how do you calculate that? If you have an ongoing contract, then the total expected or contractual value, what's written on the contract, because it hasn't finished, it's ongoing, so you don't know exactly. So you take what's written on the contract documents as the Bible. That's it. And you would divide that by the total expected duration, including all option years. So say you have a contract, you're in the second year, it's a $10 million contract, 1 year base, 5-year options. So the total value is 10 million, you divide it by 5, even though you're in the second year and even though these are option years, you divide it by 5 and you arrive at $2 million. That's the annual value. And you can't pick just one of the 5 years and say, hey, in this year I got more money from the government. No, the entire duration, the entire value divided by entire duration. Now, if it's a completed project, then the way you calculate it is the actual obligated amount, whatever the government paid you, maybe less than on the paper or more than on your award document. And you divide that by the actual duration. Sometimes the contract is supposed to be 5 years, it's finished in 4 years, or takes 6 years. So you take that 4 or 6. So the actual duration, that's how you calculate the annual value. Now the second requirement is contract date. If the project is ongoing, it must have at least 6 months of completed performance as of January 12, 2026, meaning that you can use contracts that were awarded and started before July 12, 2025. You can't use a contract that you got 2 months ago, for example. If it's a completed contract, then the completion date must be within the past 5 years, from January 12, 2021 till now. Whatever the completion date is acceptable. Doesn't matter when it started, 10 years ago, 20 years ago, whatever. The completion date must be within the past 5 years. Then we have the third requirement, which is the past performance rating. The past performance rating of which comes from your CPAR, and if you don't have a CPAR's document for your contract, you have to get a JP6 form. The past performance rating for that contract must be above satisfactory, and I'm going to discuss this later. In terms of the fourth and last requirement, which is the most important one, is the relevance in terms of the scope of the contract. Now, this can be proven that this contract you're bringing to table is relevant through two ways. Either the contract that you have has an auto-relevant NAICS code. Auto-relevant NAICS code means that the government has issued a number of NAICS code that we saw, and I'm going to go over again. If your contract has one of those NAICS codes, you're good to go. You don't have to prove anything. If not, then there's a form that comes with the RFP called JP3. You have to get that signed by the contracting officer. And many times that's a necessity because many times the contract does cover business administration work, but it has NAICS code for research and development or something like that. It doesn't have one of those auto-relevant NAICS codes. So you have to get that JP3 form signed. Now, these are the acceptable or what they call auto-relevant NAICS codes listed here. If your contract has these, you're good to go. If not, JP3 form. It's also listing the size standard, meaning that overall average of past 5 years of your revenue under that particular NAICS code decides whether you're small, if you're below that, or large. Okay. Let's look at the second subfactor, which is called scale. For each QP contract, you get a point if the annual value is greater than or equal to $1 million for small business and $2.5 million for unrestricted. Or maybe the value is not that high, but the number of FTEs is equal to or greater than 5 for small business and 12 for unrestricted. In that case, you get 1 point. Remember, the minimum value was 500K. That was a minimum. You didn't get extra points for it, but you get an extra point if the annual value is 1 million instead of 500K. Okay, now you get a second point for each QP if the annual value is greater than or equal to $4 million. This is second point. So you already have that 1 point for $1 million. Now, if the annual value is over $4 million for small business or over $10 million for unrestricted, you get an extra point. Or maybe the value is not that high, but the FTEs, the full-time employees that you're using or were using on that contract are high. So if it's more than 20 for small business or more than 50 for unrestricted, you get a second extra point. Note that the credit is provided for the total annual project value, not just a portion relevant to this domain. So maybe the scope of your contract covered a lot of different things. one of them is business administration. They're not going to sit down and separate these things from each other. They're going to look at the total annual value of the contract itself. Also note that the maximum score for this subfactor is 6 for both small business and unrestricted. So even if all 5 contracts that you bring to the table get 2 points, that's 5 times 2, 10, you will not get that. Maximum is 6 for this subfactor. Now let's discuss the third subfactor, which is called integrated experience. Here you get 1 point per QP if 5 or more labor categories were used in the execution of that contract. Labor category like a manager here, or a clerk, an engineer, things like that. And each of those have 4 actually different levels, which is considered separate LCAT, junior, mid-range, senior, and SME. So a combination of these, if you had 5 or more, you get a point. Now, or you get a if the scope of the contract covered 3 or more domains. So maybe the contract is about business administration, but also you did a little bit of marketing in it, or you did a little bit of finance in it. It doesn't matter how much or what, just the scope covered, a little bit of my finance. Then if you can show that 3 or more domains were actually in the scope, you get a point. But it's an or, not and. So meaning that, what I mean is that even if a contract, a QP, has both 5 or more LCATs and 3 or more domains, it doesn't get 2 points. It still gets 1 point. And the total obviously is 5 points for both small business and unrestricted. Okay, moving on to the fourth subfactor, which is management and staffing. Now there are 3 different factors here that you can get points for. One is surge, one is number of subcontractors, and one is number of personnel with clearance. For each, you get a point. For each QP, if it has a surge, you get 1 point. If it has 3 or more subcontractors, for unrestricted, 5 or more. Used in that, and it doesn't matter how many days those subcontractors were used. As long as you can prove that you had them for that contract, you get a point. If you had 5 or more personnel with clearance in that contract, like secret, top secret, SCI, or Q for Department of Energy, you get a point. So one contract by itself can get 3 points if it has all of these. But overall, you cannot get more than 7 for small business and 5 for unrestricted. And I should mention what the definition of surge is. Surge means increase of more than 10% of the value of the contract, or the amount of work that was supposed to be done, 10% increase in that, in less than 45 days of lead time. That's the definition of surge. So if you have any of these, you get these points. Okay, and the last subfactor is past performance. If all 5 contracts have a positive, meaning above satisfactory past performance rating in their CPARs or in their JP6 forms, you get a maximum of 3 points. This is both for small business and unrestricted. If 4 out of the 5 QPs have this above satisfactory rating, you get 2 points. If only 3 have above satisfactory rating, you get 1 point, and less than that, you don't get any points. Now, a few important points or notes. You can use a JP6 form only if you do not have a CPAR. So if the contract has a CPAR, you cannot, get a JP6 form signed. You have to use that CPAR. And also the JP6 must be used. It's like a PPQ, past performance questionnaire, but it's a specific form, so you can't substitute it for any form that you have. You have to use that JP6 form if you have to use it. Now, I will go into the details or discussion of how you calculate above satisfactory because it's important. But remember that you have to have an above satisfactory for each contract. And finally, for the UNR track, if all 5 contracts for 5 QPs have a very good or exceptional rating in the CPARs or JP6 form for small business utilization factor, then you get 1 extra point, overall 1 extra point. So that's why UNR is overall 4 points and small business 3 points. Now, question is, how do you know if your CPARs is above satisfactory? Because it has many subfactors. So what do you do? Let's look at the subfactors first of all. So we have technical or quality of service, schedule or sometimes called timeliness, cost control, management or sometimes called business relations, and finally small business subcontracting or small business utilization. Now, the way you calculate your average score is that you give a point score to these ratings. So exceptional is 5, very good is considered 4, satisfactory is 3, marginal is 2, and unsatisfactory is 1. You replace these numbers for the ratings, add them up, and then divide by the number of applicable ones to get the average. If a rating is NA, you don't count that. Now let's take an example in that orange box I put in here. Assume that our sample contract has these ratings. So for technical, it has exceptional. We put a 5 there. For schedule, it has satisfactory. We put a 3 there. Cost control is marginal. We put a 2. Management is satisfactory. We put 3. Small business utilization is NA. We don't count that. So how do you calculate? You add 5 to 3 to 2 to 3. That comes to 13. You divide it by 4, not by 5, because we don't count small business utilization. So 13 divided by 4 is 3.25. Now satisfactory score was 3, if you remember. So we have 3.5 for this contract. So it's above satisfactory, so you can use this contract. This is the way you need to calculate whether all your contracts are above satisfactory or not. Okay, I hope this helps. There's also one special case I want to cover. If you have a single award IDIQ or BPA, and my emphasis is on single award and you being the prime. So you are prime and it's a single award IDIQ or single award BPA. Then you are allowed to bunch up the task orders together and consider it as one of the 5 QPs. You can only do this once, so only one of the QPs can be a collection of task orders, as they call it. The good thing about it is that when you add them up, then you can claim the score for all the value, the number of FTEs, the number of subcontractors, all of that, because it's considered one contract. So, for example, take a case of a single award IDIQ you have, and it has, say, 20 task orders, but all the task orders are in the ranges of $50,000, $100,000. I'm talking annual. So you can't use any task order by itself. What you can do is, say, you bunch up 10 of them or 15 of them, and you arrive at, say, $1.5 million or $1.2 million, something like that, annual value. Number of FTEs, one has 1, the other has 3, the other has 4. You add up the number of FTEs. One of the task orders has 1 subcontractor, the other has 2, the other has none, the other has 4. You add up all the subcontractors. And this way you can claim score for all of them as just one contract. So this is very good if you do have a task order, single award IDIQ, and you're prime on it. You can actually take advantage of this, and one of your QPs can come from that. So that was the main score factor, the QP factor and its sub-factors. Now let's consider the second main score factor, the FEP, or Federal Experience Projects. The name is on it, Federal Experience Projects, so it means that you can't use commercial contracts, you can't use subcontracts, even subcontracts to federal contracts. You have to be prime on that contract, and it has to be federal. Now you can see that there are 4 points for task orders, they're called, and 1 point for federal agencies. Let me go into details of these for you. So the first sub-factor, you get 1 point for each task order that you have performed under a multiple, and emphasis on multiple, award IDIQ or BPA. And you must be the prime, obviously. So if you have a multiple award IDIQ, for each task order that you bring to the table from that, you get 1 point. The maximum is 4, meaning that you can have up to 4 different task orders. Now these can be under one multiple award IDIQ or BPA, or under different ones, doesn't matter. Also, these contracts don't need to be the same ones you used in the 5 contracts for QPs. So these can be completely different ones, new ones. They can be, but essentially 3 requirements are there. You have to have a prime federal services contract. You are the prime, it's the federal, and it has to be multiple award IDIQ or BPA. the annual value must be over 250, not 500K like QPs, 250, and it's the same for small business and unrestricted. So 250 annual value. And then the recency, the date is similar to QPs. So 6 months of performance if it's ongoing, or completed within the past 5 years if it's finished. Now, it's important to understand that they do not have to be relevant to the business administration domain. Maybe you did a contract in finance. Maybe, task order towards finance. Maybe the task order was about marketing, whatever. All are acceptable. So you don't have to prove that it's relevant to business administration domain. Okay. Now, in terms of the 1 point that you get for federal agencies, you have to prove that you have worked with 3 different federal agencies. Now, there are 3 requirements. First, obviously, you have to be prime on those contracts, and they need to be federal contracts. The value is, the annual value is that 250K. Again, the same for small business and unrestricted, and the recency 6 months of performance if it's ongoing, or completion within the past 5 years. Now, again, you don't have to show relevance to the domain. So it doesn't have to be towards business administration. It could be any other type of service that you provided. And similar to the previous ones, they don't have to be the same contracts you used on QPs, or even the 4 task orders that you got points for in the previous sub-factor. These can be completely different. They can be standalone contracts or task orders, it's up to you, but they have to be federal. Okay. So that was the second main factor, FEP, Federal Experience Project. Now the third main factor, which is called Systems, Certifications, and Clearances, or Systems and Certs. So this is a graphical comparison of the 3 sub-factors. I will go very quickly over this because we are short of time. The first one, business systems. If you're a small business, you have to have an accounting. If you have an accounting system, approved accounting system, you get 1 point. For large businesses, you get 1 point if you have any of 2 of these that are listed: the accounting system, approved rates, purchasing system, estimating system, EVMS, material management accounting system, and property management system. If you have 2 of these, you get 1 point. If you have 3 of these, you get 2 points. That's for unrestricted. Now, all of these must be government approved. So the accounting system, if it's third party approved, doesn't count. It has to be government approved by DCAA or DCMA. And similar for the other systems certifications too. Now, facility clearance is easy. Either you have secret or top secret FCL, you get the points, but it has to be active. Pending doesn't count. So active facility clearance. Now, for other certifications, there's a CMMI level 2, ISO 27001, ISO 9001, ISO 22301, and CMMC level 2 or higher. For any of these, you get 1 point, up to 2 points for 2 of them. So that's how you get 2 points maximum here for these other certifications. Now, there's a special case also I wanted to mention before we finish the scoring part of business administration domain, and that is the mentor-protege JVs. So if you're submitting your proposal as a mentor-protege JV, for QPs, the 5 QPs, at least 1 of them must come from the protege company. So you can't have it that all 5 are coming from the mentor. Now, on the other hand, the minimum threshold annual value for each domain, including the business administration domain, is halved when a protege submits a contract. For example, for the business administration services small business, the minimum annual value for QP contracts, as we mentioned, was 500K. But when a protege provides the contract, then it can be 250K or above, not 500K. The same stands for FTEs, number of FTEs. So if you need 10 FTEs to get a point, if the contract is coming from the protege and the number of FTEs is 5, you get the points. The same rule applies for FEP contracts, Federal Experience Projects. There, remember the minimum annual value was 250K. If it's coming from the protege, if the contract is coming from the protege, it can be $125,000 or above. Finally, these rules apply to the unrestricted submissions also. So for a mentor protege JV submitting under a business administration services UNR, the annual value of the protege contract can be 500K. It doesn't have to be $1 million. So these are the special cases when you're submitting as an MPJV. So that was the scoring system for this domain. Let's now discuss eligibility assessment as well as score optimization. These are the first steps that you should take. If you have multiple contracts, use a tool to first profile your contracts and see what score each will bring for you, and then which 5 QPs to select to maximize your score. I'll show you our eligibility assessment tool on the next slide. To do that, you need to read the RFP and the Q&As, usually the previous Q&As and the latest RFP documents for the original OASIS Plus carefully, and fully understand the requirements for each score factor. You must create a table to score each score factor for each of your QPs. Then estimate your best score and do a gap analysis of where you're short. In doing that, focus on maximizing the score on the 5 qualifying projects and maximize the use of your commercial subcontract projects if possible. Now, following your gap analysis, decide on partnering and multiple partners, maybe, to boost your score. You should consider outsourcing the eligibility assessment to ensure you have a good chance of success. Now, this is a form we use to do eligibility assessment for our clients, and I'm going to give you the link for this service as well. It makes sure that you don't spend money on something that you don't have a chance on, and also ensures you know where your gaps are to bring on team partners. So for each contract, you have to, on the column on the right hand side, the yellow column is where you actually respond to them, the value, duration, whether you use 5 FTEs or not. So these are the specific questions that we have prepared that you have to answer to, and then based on that, this is another page. Now, based on the previous slides form, our tool creates this, which independently scores each contract. The 10 columns from the right and the graphical representation of the score below it, are produced from those the previous form that I showed you, and then it automatically picks the best 5 to maximize the score. So those columns that are green are the best 5. The orange column is the final best score you get for each subfactor, scoring subfactor, with the total at the bottom. In this case, it's 44 out of 50, which is good. This is a small business submission. So this is specifically telling you, hey, you're good to go. You don't need a partner. You are a few points above the minimum threshold of 36. So everything is good. Maybe the total comes to, say, 32, in which case where this shows you where you're missing points and what partners to look for to actually get those points above 36. So we call this the eligibility assessment service that we're providing. And if you're interested in our eligibility assessment service, you can click on the offer tab on the right hand side panel to go to the link to read more on the service and request it if you want. Let's discuss substantiation now. Remember, the proposal you're supposed to provide is essentially the documents that prove your self-score is justifiable. These are the award document, perhaps, the statement of work, the SAO, the FPDS printouts of the contract. FPDS is the government website that has lists all the contracts. So it's considered official document when you have a printout of it. The CPARs, or the JP6 in lieu of CPAR, and the JP3 form if your contract's NAICS is not what it's supposed to be, or if you're a sub and want to prove relevance and other QP subfactor information. So you need to tag and highlight the relevant information on each piece of document. Let's see some example of this. So this is an example award document with relevant pieces of information highlighted and tagged as well. This is an FPDS printout, again with relevant pieces of information like contract number, dates, values, etc., highlighted and tagged. So this is how you the documents. Now, you can see that there are a lot of moving parts involved. So you need to know what documents you need to present to justify each point score. They're not necessarily just one document required per point score. So you need a checklist, sample here, for example, to ensure that nothing is missing. This is an example of a checklist for the 5 contracts that were selected for QPs are listed at the above under 3. Those are the 5 contracts, and below it are the documents that are needed. And when it's ticked, it means that it's ready and it's prepared. So for each of the score factors, you might need different documents, and they have to be tagged, highlighted, things like that. So a lot of document management work needs to be done. Okay, so that brings us to the importance of compliance in these self-scoring proposals. Due to shortage of time, I will not go into the slides about compliance. I just want to emphasize the importance of compliance, as I've seen many companies, in fact, lose because of not paying enough attention to this and not paying the price for ensuring compliance when they're preparing their proposal. So please go through the slides that I have put in here and discuss it with your team when you are actually preparing your proposal. Now, with regards to price, there's always a question as to how price delay plays in the self-scoring proposal submission. The short answer is no score is given for price. They just check it to be within the acceptable range and complete for all items. That's it. A few points. You can refer to this slide later, but essentially you have to provide pricing for 20 LCATs at the SME subject matter expert level, and you want to make sure that you're not below the maximum you are below the maximum acceptable government rate. And that's all there is to it. They give you what is the maximum acceptable rate. You just want to make sure that you are below that. That's all there is to it. So it's very easy to prepare your price form. There's a form that comes with it, with the RFP. You just have to fill it out. Okay, teaming is extremely important in OASIS Plus. The short rule is if your own score cannot be above the threshold, use teaming, period. No indecision. In OASIS Plus, everything is about the score. Whether you get your score all by yourself or you have a team of 5 subs, for example, the government doesn't care. At the end of the day, the score is the king. Now, some key points here. I will not go into the details of all of them, but essentially, I recommend, or we recommend as our company, that if you're not 3 to 5 points above the threshold, so this is new. If you're not 3 to 5 points above the threshold, consider using a partner. You need those cushion points, those 3 to 5 points. For JVs, MPJVs, prime sub relationships, all are acceptable. You can use the partners contracts for QPs and FEPs, which account for nearly 90% of the total score. One important factor is that if you're a small business, your subcontractors must also be small under that particular domain. You can read the rest of these points that I've listed here later on when you refer back to it. And we have a free partnering portal. You can see the link here. I'll put it up on the chat as well. So you can actually register here, go find your partner, whether you want to be prime or sub, and this way you can actually communicate with them and reach an agreement and work from there. So this is a free partnering portal. We've already, I think 400 companies registered and got together during the previous OASIS Plus submission. So this is something very helpful. Okay, and this is the first page of that site. Let's now discuss strategy and share some experience. So this is perhaps the most important opportunity for many businesses for the next 10 years, or I should say 8 years. There is no competition, so use all means possible to win a seat, including partnering with other companies, either as prime or as a sub. Expand on domains. If you have past performance in any domains other than your main domain, but not the required 5 QPs, don't relent. Use partners and expand your grasp by going after multiple domains. This holds true for both small business and unrestricted tracks. For small businesses, don't stick to just your own set-aside track. First of all, you should also go for the total small business track. It's considered separate from 8A Hub Zone WOSB and STV OSB. It's a complete track. And secondly, if you have strong QPs, by all means go for the unrestricted track as well. Say you're sure that you get above 42, why not go for unrestricted as well? At the same time, don't be overconfident. Self-scoring proposals are all about analytical thinking. Good writing skills, which is the key strength of us proposal managers, is of no help here. You need to have good analytical thinking capabilities and good document management. Now, outsource if you have not done this before. Even if you have, get your proposal reviewed by an outside source. I've seen many companies lose because of not doing that. Now, focus on your QPs. They are the driving factor. I think I've shown that in different ways to you. First, do an eligibility assessment to understand your gaps and the need for teaming. Maximize your score. Use a per contract scoring system to see what your score looks like. If below the threshold, that's 36 for small business, 42 for unrestricted, select a partner as soon as possible. Companies are already teaming up, so you need to hurry. Ensure that you have 4 to 5 question points, as I mentioned previously, even if you have to partner to get them. Maximize the use of your subcontracts and or commercial contracts if you have any. There's no difference. You get the points and that's it. Check compliance, think compliance, and eat compliance. It's really important. Don't lose time. Time is of essence. You don't want to miss the 2026 task orders. So start yesterday, start as soon as possible. And here I wanted to share our experience in terms of the time and resources needed for the preparation and submission of the OASIS Plus proposal. There are essentially 4 main phases. There is a phase 0 eligibility assessment if you're unsure about moving forward, but there are 4 main phases. Phase 1, contract selection and score optimization. Phase 2, preparation of the proposal documents. That's essentially the proposal preparation, or we call it substantiation. Phase 3, compliance reviews. It's a phase by itself, important. And then phase 4, uploading to Symphony. Symphony is the government's portal. Don't underestimate this. It usually takes 2 or 3 days. It's not a copy paste. So the graphical representation of the time and resources for each phase is shown also. So you can see that 50% of the time is spent in phase 1, contract selection and score optimization. This is the average we have found preparing over 200 OASIS Plus and other self-scoring proposals. So I just wanted to share this with you as well. So how can we help you on OASIS Plus? Here are the services we have. We have free consultation. Just we set up time to call and we discuss, answer any questions you have. Free partnering hub, which I showed you, and you can go to the website and register and then start finding teaming partners. Pre-qualification assessment. Again, I gave you the link, $490, so that you don't spend money on something that you don't have the minimum capabilities. Also, it gives you where your gaps are, so you know how to partner with others. Full proposal development with dedicated proposal team. So we do scoring, assessment, optimization, full proposal assembly, cradle to grave. Everything is on us. Full and multiple compliance checks, uploading to Symphony. All of this is on us. We are different from other companies. Some companies just give you consultation. That's not how we work. We don't give consultation. We take the responsibility, because at the end of the day, we want you to win. It's good for us, our win rate. It's good for you. You don't lose your money and you get awarded. So we take the whole, heavyweight and work, and you just provide us with the documents. We do everything else for you. And finally, for those of you who have in-house teams, we do reviewing and auditing. So we do 2 rounds of compliance checks, score optimization checks, and we also help and audit uploading to Symphony for you. So these are the services we provide. Here are contact information, myself, email and phone number, and my colleague Maroon Freedy. So if you have any sales inquiries or you want to set up calls, just contact Marone. Email is usually better for both of us. Technical questions for me, and consulting and sales inquiries for Marone, and we can set up calls, jump on them, and discuss any of your needs or answer any questions you might have. So we have a few minutes to answer some questions, although I see there are a lot and we don't have much time. So question from Frank, how do we prove surge? Okay, so the mere fact that the contract or the SAO, the statement of work, mentions the possibility of surge is not enough. That's not enough proof, because maybe in the performance of the contract, it was never executed. So you have to show specific documents like payment slips or letters from the contracting officer requesting the surge situation or the performance of it. So you have to submit these documents. Question from Lisa. What if our contracts don't have CPARs? You mentioned the form. Right. So if you don't have a CPAR, there's a form called JP6. It comes with the RFP, and you have to ask your contracting officer, or if you're submitting a subcontract, your prime, to actually fill it up, sign it, and send it back to you. Now, remember that it is essentially a PPQ, past performance questionnaire, but unlike other contracts, the prime or the contracting officer, they're not supposed to send it to the government directly. They're supposed to sign and send it back to you, and you put it inside your proposal and submit. This is important. And remember, as I mentioned, JP6 can be only used if a CPAR does not exist. You can't, create a JP6 and get it signed if a CPAR is already there. Okay, this is a sales question. So I'm getting a lot of these sales inquiries. I will communicate with you guys directly, but yes, as I mentioned, we can support you fully on this, prepare the proposal, and get you to win on this. As I mentioned, we helped 97 companies win on the previous submission of OASIS Plus. Question from John. Did you say we can have subs, but how many is acceptable? As many as you like, John. So no limitations. It's up to you how many you bring to the table to make sure that you have enough points to be awarded. Question from Sandra. Can we use contracts from our subcontractors for all score factors? For QPs and FEPs, yes. You can use contracts from your subcontractors. But for systems and certs, no. For systems and certs, they can only come from the prime. I'm assuming that you mean a prime sub relationship, obviously. So for systems and certs, all of that comes from the prime. Question from Alan. If we are a JV and one of our members has secret FCL, can we get a point for it? Yes. So unlike the prime sub relationship, in which in systems and certs everything must come from the prime, in a joint venture agreement, if any of the JV members have those, for example FCL or other things, other requirements, you get the points for. Okay, so that's the good thing about JVs. Question from Jonathan. For the pricing on the LCATs, how do we know which state they will be working at, or even outside US? This changes the pricing. Okay, so you're supposed to consider the highest pay state, but within US. If in the future you receive a task order for OCONUS, you can actually change the pricing. Now remember that the pricing you're providing here will not be used in future task orders, except and only except for cost reimbursable task orders, and only when they're asking for one of those 20 LCATs at SME level, because the pricing you're providing is for SME level. So maybe you provided pricing for SME level, but you get a task order, it's cost reimbursable, but it's a junior level of one of those LCATs. You can give new pricing. You don't have to abide to what you provided here with the main IDIQ. Question from Alice. Can we be sub under multiple primes? Yes, of course. But there is a catch. Remember, you cannot lend them, say company A, company B, the same contracts, your contracts, I mean, if they're going for the same domain and same track. So if company A and B are going for both for the same domain, for example here, business administration, and same track, both of them are 8A. No, you can't do that. if the government finds out that the same contract has been used in that way, both companies will be disqualified. But if one of them is going for a different track, so one of them is 8A, the other is hub zone, it's good to go. You can actually use the same contract. And primes should be aware of this. So when you bring in subcontracts, make sure that they are not lending their contracts that you're using to others who are going towards the same domain and same track as you are, as the prime. Question from Caleb. If you want to team up with a company, do they have to have the same set-aside standing as us? No, they just have to be small. So if you're creating a prime-sub relationship with a company, just make sure that they are small, but they don't have to be the same. So if you're 8A, they don't have to be 8A, and so on and so forth. Question from Fred. What if we want to go after multiple domains? How do we prepare the 5 contracts? Okay, so Fred, you need to prepare separate proposals for each domain. Thus, you need 5 contracts for each domain. For domain A, 5 contracts, and for domain B, 5 contracts. Sometimes you can use the same contract if you prove the relevance. It's not very easy, but otherwise, you know, essentially you would need 5 for this and 5 for that. Question from Jack. You mentioned something called cushion points. Can you explain that again? Sure. So I said don't be content if your score is right at 36 for small business and 42 for unrestricted. You don't know how the reviewers will review it. I mean, the government reviewers. And you don't want to risk it in that they don't like this or that score claims, or say this proof is not sufficient and they deduct this or that point, and you know your final score falls below 36 or 42. You need what we call a cushion point or backup points. We suggest that if you're going for small business submission, you shoot for 40 points. If you're going for unrestricted, shoot for 45, 46. Those are the cushion points you need just to make sure. And our recommendation to our clients has always been this. If you're at the maximum of your score and you still not, around the 40 points for small business and 45 to 46 for unrestricted, bring in partners. Even if you have to use the partners as a backup and cushion points, do that to make sure that you win on this contract. Okay, we are out of time a lot. So I would like to first apologize for not being able to answer all the questions. I see there are more. I will certainly respond by email to your questions. So thank you for participating in our webinar. I look forward to seeing you in our future webinars as well. Have a wonderful day.